because of the tumble in crude prices from 147 a barrel down to 80. ExxonMobil has already dropped 19% this year in New York stock trading, heading for its worst performance since 1981. That's in share price. Obviously, its financial performance is doing quite well, thank you. Now we'll go to a word from our sponsors and come back with the rest of the news.
Every day, the world wakes up and goes to work, pursuing the unique opportunities that lead the global economy forward. The complexity and close connectivity of today's global marketplace is a true modern miracle that can create unparalleled success. But it takes confidence, passion, innovation, and understanding.
Enabling opportunity.
Protecting capital.
Engineering innovation.
Investing in your future.
Ensuring continuity.
Finding the right balance.
It takes Aon.
From prehistoric time to today, man's progress has been marked by his ability to fashion tools and use them to his advantage. From early humans making tools from stone, man evolved and was soon trading with other men. Money evolved, and tools such as the abacus to handle complex money transactions were developed. By the end of the 19th century, machines such as the cash register began to appear. 100 years later, we have even better computer-driven machines which track stock, change prices, and automatically reorder. Meanwhile, the reinsurance industry has failed to embrace man's drive for progress. The reinsurance industry today would be as familiar to practitioners from the 1800s as it is to modern underwriters. An underwriter or broker from 1800 would settle nicely into today's business. That is, until now. For the reinsurance industry, pivot point changes everything. Soon it will be understood that the period before pivot point was as dark as the caveman period was before the abacus. Come and see for yourself if you don't believe. After a demonstration, you will understand what is possible.
Getting some Lehman Brothers spillover now. Bermuda-based Aspen Insurance Holdings said yesterday that it reported a net loss for the third quarter of $116 million as it suffered the effects of payout claims on Hurricanes Gustav and Ike, as well as exposure to Lehman Brothers investments. Aspen, which made a profit of $117 million for the same period last year, saw the two hurricanes account for $1.91 of the reduction in earnings per share for the third quarter and $1.80 per share for the first 9 months of 2008. However, gross premiums written for the quarter were up 18%. However, combined ratios rose from 84.5% in the third quarter of last year to 123.3% during this year's third quarter. Net investment income plunged over 73%, down to $19 million over the same period. Third quarter performance included a $44.5 million pre-tax charge for holdings in Lehman Brothers Holdings senior notes and subordinated debt. Yesterday we reported that Swiss Re said no, we are not asking anybody for any help. They said they're not asking any government authorities for help. Now we're getting some indication as to who may be stepping in to help them. Berkshire Hathaway is in discussions with Swiss Re about upping its quota share deal with the reinsurance giant. This is according to Reinsurance magazine. According to sources, Berkshire Hathaway president of Reinsurance, Ajit Jain, who's the gentleman in the foreground here, in the background to the right, of course, is Warren Buffett. Mr. Jain is in the process of meeting Swiss Re to discuss this. There are currently worries that collateralized debt obligation losses may have eroded up to 15% of Swiss Re's working capital. In February, Berkshire took a 20% quota share in Swiss Re, as well as a 3% stake in the company. Both Swiss Re and Berkshire Hathaway declined to comment. Mr. Jain is supposedly discussing whether or not Berkshire is going to increase its quota share deal with Swiss Re. From Hartford comes news that the Hartford Financial Services Group has reported a loss of $2.63 billion in the third quarter, hit by investment losses and CAT payouts. The loss was $8.74 per diluted share. According to Romney Eyre, the Hartford's chairman and CEO, this was an extremely difficult quarter for the company, Volatile credit and equity markets and the largest catastrophe in the past 3 years significantly affected our results. Mr. Ayers said earlier this month we took decisive action to fortify our capital by securing a $2.5 billion investment from Allianz. Hartford is financially strong with the liquidity and capital to meet our commitments to our customers. Of course, under the agreement with Allianz, Allianz bought in at $31 a share, $750 million of preferred shares convertible to common stock, and they also received they also purchased $1.75 billion of 10% junior subordinated debentures. Hartford had 2007 revenues of about $26 billion. Cigna on this morning reported that its third quarter profit fell 53% due to equity market losses, and the insurer cut its 2008 outlook for operating income. The company that's based in Philadelphia is an American managed healthcare company. It said that it now expects